afternoon, everyone, and thank you very much for attending. Let me first introduce myself. My name is Kinan Hassino. I'm the General Director of Equiti Group, Abu Dhabi branch. First of all, I would like to go through an introduction in regards to our company profile and what are the services that we provide. Equiti Group, of course, very famous brand, especially in the UAE. We are a global broker made in UAE. We are locally licensed, and we do, of course, have many different financial brokers, many different financial products that we offer to our investors, including CFDs, FX pairs, and more commodities, shares, cryptocurrencies, and ETFs. Our platform is MT4, MT5, and our own mobile app, which has been launched recently. And of course, we have a portal which is very accessible, and it provides signals to our clients. Our portal contains a lot of details which could elevate your trading experience. And of course, we have our specialists and market analysts. They appear on most of international and national TV channels. We have Equiti Academy as well, and we have dedicated sales support that is 5 days a week. 4 types of accounts: standard, premier, elite, and demo account. Of course, it depends on the client profile and depends on the criteria of the client. A lot of payment options includes wire transfer, of course, all type of payment solutions, Skrill, NetTeller, and we have multiple bank accounts as well locally. Now let's move to our topic, which is, I think, it's all goes down to psychology at the end of the day. With these days, with that much of volatility going on, I believe psychology is 80% of our trading, and 20% is the strategy. I don't know how much do you agree on this, but I think it's a purely mental work. It's a lot of pressure on our mental and focus and concentration. It is very, very, very important to have the discipline internally before we go on the screen. Because this market, especially now, at this time, at this market volatility, emotions can go so massive, and that will definitely affect our trading decisions. Some of the keynotes, well, I'm asking myself this question. Yesterday, I took a trade myself, and I was thinking that I have booked my profit at 300 pips on Dow Jones. But actually, after I closed my trade, and just a couple of hours later, Dow Jones moved 400 pips. So I was blaming myself the whole time. Why did I exit too early? I could have made so much more profit. But let me tell you something. If we want to bring it down this way, as we speak now, we are losing opportunity in the market. Something is going on right now, as we speak, okay? And you can't have all the opportunities going on in the market. That's extremely difficult. And you can't blame yourself all the time because you exit the market too early. Once you book your profit based on predefined strategy, that's it. You must be out of the market. So our brain is wired for survival, not trading. You can't be trading the whole time. You can't be just behind the screen the whole time. It's a lot of pressure. And once you do so, mistakes start to appear. Once you start trading without a specific timing, a predefined strategy, an entry and exit points, that's where things goes wrong. Now, some of the common trading biases: loss aversion. So a trader exits a winning trade too soon just to avoid feeling of loss. We talked about it a bit. And we feel losses quite more than winning. We have the second type is confirmation bias. We do follow the news which we believe in unintentionally. We go and we search for the reports that is compatible to our trade. So we, just by nature, you want to support your own decision and you want to confirm this to yourself that you took the right decision and it wasn't wrong. So that's called confirmation bias. Overconfidence bias. Let's talk about this one. You or anyone can enter the market for the first time. You make 2, 3 wins, and then the confidence starts to grow more and more and more. And instead of sticking to this 0.5, you go up to 10 and 15 lots. How many times this happened? And this is normal because you, over time, you build this confidence up to your experience. Your experience applies that I have made $1,000. Next time I want $3,000. Why don't I go a little bigger? It worked before. And that's where the issues start to take place. And we have the herd mentality. I was a victim of this. I've seen everyone buying gold. I bought gold at 3,400. Now gold is 3,300. It's $100 just because I've seen it everywhere that I have to buy gold. Everywhere. If you open any TV channel, anywhere, any report, everyone is saying gold is going up. It will go even more and more. And that's when we all go in one direction. So, emotional discipline and risk control. I think we touched base on this. How top traders control emotion. Use a stop loss. Simple, easy. Everyone knows how to do it. Set predefined rules. I know I will enter this trade at a loss of 2%, profit of 4%. Strategy set. I just follow up. No emotion involved, no human intervention. It's mean-made. It might work, it might not. But I have followed a certain structure. And this structure, it either proves that it's working or not. I have to stick to it. Journal trades. How many of us open the journal and have a look at the trades we've done? How many of us have done revisiting to previous trades that's been opened before? I think this is very rare to happen, so that you can learn from the mistakes and you can improve your trading from the mistakes that we have made. And detached ego from outcomes. Outcomes is market performance. It shouldn't be personalized. It should be me. It should be the market moved to the side of my trade. And always remember, amateurs focus on rewards. Pros focus on the process and on the strategy. So, some tips. Of course, use trading journal. We just talk about it. Meditation. I don't mean meditation. I mean we have 1 or 2 hours of trading per day, 3 hours, but you can't be full-time trader. It has to be in a certain timing, and you have to have your own break, and you come back to the screen. And of course, position sizing, if you do have the proper size, then the profit is logical, and the loss is also logical. It's not going to go so wild. And backtesting to build the confidence on your system. Remember, trading is 20% strategy and 80% how much you can control your feeling, your emotions, and how you react behind the screen, especially during these times. The market doesn't beat you, you beat yourself. The market would never be your enemy. And you should not all the time follow your opinion. If you see the trade is not working, it's simply not working, you have to shift to the other side of the market. You have to be on the buying side. If you're doing the other way around and you stick to your opinion, you're simply killing it. You are the one who control the positions. So it's normal to shift and to change the side of the market and to go from one side to another based on the market performance. Master your mind and you will master the market. It was a very simple topic, but believe me, psychology is everything. How we control ourselves, how we can stick to our strategy and use, and now, by the way, the AI and a lot of other tools eliminate the intervention of human emotions to the minimum, and we should use those systems. We should improve our way of trading and eliminate our personal performance from trading itself and to stick to the strategy. That's basically from my side. Thank you very much.